Complete Guide to Mortgages. Table of Contents. Introduction to Mortgages. 1. What is a mortgage? 2. How does a mortgage work? 3. Types of mortgages. Mortgage process. 1. Preparing for a mortgage. 2. Applying for a mortgage. 3. Mortgage approval process. 4. Closing on a mortgage. Mortgage terms and concepts. 1. Interest rate. 2. Principal. 3. Down payment. 4. Amortization. 5. Loan term. 6. Private mortgage insurance, PMI. 7. Escrow. Choosing a mortgage. 1. Fixed rate versus adjustable rate mortgages. 2. Conventional versus government-backed mortgages. 3. Mortgage points. 4. Mortgage shopping and comparison. Managing your mortgage. 1. Making mortgage payments. 2. Refinancing a mortgage. 3. Home equity and building wealth. 4. Dealing with financial hardships. Legal and financial considerations. 1. Mortgage contracts and documents. 2. Mortgage regulations and consumer protection. 3. Tax implications of mortgages. Conclusion. 1. Introduction to mortgages. What is a mortgage? A mortgage is a type of loan specifically used to purchase real estate, typically a home. It's a legal agreement between the borrower, homebuyer, and the lender, usually a bank or a mortgage company. The lender provides funds to the borrower to buy the property, and the borrower agrees to repay the loan with interest over a specified period. How does a mortgage work? When you take out a mortgage, you borrow a certain amount of money to buy a home. This borrowed amount is called the principal. You then make monthly payments, which include both the principal and interest, over the life of the loan. As you make payments, you gradually build equity in the property. Types of mortgages. There are various types of mortgages available, each with its own features. 1. Fixed rate mortgage. The interest rate remains constant throughout the loan term, providing predictable payments. 2. Adjustable rate mortgage, ARM. The interest rate can change periodically, affecting your monthly payments. 3. Conventional mortgage, not insured or guaranteed by the government. 3. Usually requires a higher credit score and a larger down payment. 4. Government-backed mortgage, insured or guaranteed by government agencies like the Federal Housing Administration, FHA, or the Department of Veterans Affairs, VA. 5. Interest-only mortgage. You only pay the interest for a certain period, after which you start paying both principal and interest. 6. Balloon mortgage. Low initial payments followed by a lump sum payment at the end of the term. 7. Jumbo mortgage. Used for high-priced properties and exceeds the conforming loan limits set by government-sponsored enterprises. 2. Mortgage process. Preparing for a mortgage. 1. Check your credit score and address any issues. 2. Determine how much you can afford and get pre-approved for a loan. 3. Save for a down payment and additional costs like closing costs and fees. Applying for a mortgage. 1. Gather necessary documents, income proof, financial statements, tax returns. 2. Choose a lender and apply for a mortgage. 3. Provide all requested information and documentation. Mortgage approval process. 1. The lender evaluates your application, credit history, and financial situation. 2. An appraisal determines the property's value. 3. Underwriting assesses the risk and decides whether to approve the loan. Closing on a mortgage. 1. Review the closing disclosure, detailing the final loan terms and closing costs. 2. Attend the closing meeting, sign the necessary documents, and pay closing costs. 3. The title is transferred, and you receive the keys to your new home. 3. Mortgage terms and concepts. Interest rate. The percentage charged by the lender on top of the loan amount. It determines your monthly payment amount. Principal. The initial amount borrowed from the lender to buy the property. Down payment. A percentage of the property's purchase price paid up front. A higher down payment can lead to better loan terms. Amortization. The process of gradually paying off the loan through regular monthly payments that cover both principal and interest. Loan term. The length of time over which you'll repay the loan. Common terms are 15, 20, or 30 years. Private mortgage insurance, PMI, required for borrowers with a down payment less than 20% of the home's value. It protects the lender in case of default. Escrow, an account held by the lender to cover property taxes and insurance premiums. 4. Choosing a mortgage. Fixed rate versus adjustable rate mortgages. 1. Fixed rate offers stability with predictable payments over the life of the loan. 2. ARM initially offers lower rates but can lead to fluctuating payments. Conventional versus government-backed mortgages. 1. Conventional typically requires higher credit scores and down payments. 2. Government-backed, easier qualification requirements, lower down payments, and certain restrictions. Mortgage points. Paying upfront to lower your interest rate over the life of the loan. 1 point equals 1% of the loan amount. Mortgage shopping and comparison. Get quotes from multiple lenders, compare interest rates, closing costs, and terms to find the best deal. 5. Managing your mortgage. Making mortgage payments. Pay your monthly mortgage on time to avoid late fees and potential default. Refinancing a mortgage. Consider refinancing to get better terms, lower interest rates, or cash out some equity. Home equity and building wealth. As you pay down your mortgage, you build equity, which can be tapped into for major expenses or in retirement. Dealing with financial hardships. Contact your lender if you're struggling to make payments. They might offer assistance or loan modification options. 6. Legal and financial considerations. Mortgage contracts and documents. Understand all terms, conditions, and obligations outlined in the mortgage agreement. Mortgage regulations and consumer protection. Familiarize yourself with local laws, regulations, and consumer rights related to mortgages. Tax implications of mortgages. Mortgage interest and property taxes might be tax deductible. Consult a tax professional for advice. 7. Conclusion. A mortgage is a significant financial commitment, but with careful consideration and understanding, it can help you achieve homeownership and build wealth over time. Remember to research, compare options, and seek advice from professionals to make informed decisions throughout the mortgage process.